Paul wanted us also to look at Ellies for a short-term trade. Now we can see that Ellies between 14 cents and 12 cents have been consolidating in this band for quite a while. And Paul, I could not see a spike in volume, which would be the indicator or the boomer that Ellies need to lift it above this 14-cent level. But we can clearly see that the buyers are protecting this share with a vengeance every time it gets to 12%. It just finds enough buyers to lift it to 13 or even 14 cent again. What is a bit of a concern is that it start making a new low at around 11 cent, but it could find some buyers to lift it above to close at 12 cent. It is oversold on the daily indicator, but it needs more buyers, and I would wait for a spike in volume unless you want to trade these spikes. Nothing wrong with that. It can give you a 7% in a cent, 1 cent movement, and even more than that. So technically above 12 cent, possible buy opportunity. Use 11 cent as a stop loss if you want to. It's going to be very hard to trade that with a spread, or even 10 cent. I would rather an illiquid share like Ellies. I would rather maybe consider a longer term view on it, because the interest, if you trade it on a CFD, might hurt you. But we can see exactly the same pattern happened here between October 2018 and January 2019. And I'm sure traders made use of these opportunities, these spikes in and out. But I think there are other short-term trades in the market that can treat you a little bit better and might not be that risky. Sibanye Gold. I want to go back to a weekly graph on Sibanye. And they've been lately in the news, and a lot of decision making needs to happen and has happened. But this share is testing the 40-week moving average. And the 40-week moving average is the line in the sand for long-term investors. Above it, we assume that the momentum to the top in place and that the long-term sentiment towards the share is positive. Below it, negative. So even if you can see, if we go back to September 2016, when the share changed the 40-week moving average into the resistance, it just plummeted to lower levels. Tested it here in September 27, could not keep it, plummeted. Tested again here in November 17, could not keep it as support, plummeted. Tested it 2 weeks in a row here, could not change it into a support, plummeted. Again here in October 2018, and we are at that critical level again. It needs to keep 11.55 into a support on a weekly Friday close in order for me to remain optimistic about Sibanye. So some analysts, and I might be going ahead of myself, but there is a possible inverse head and shoulder formation on the cards. If the share can find support around these levels and it can get enough buyers to lift it back to around 15 Rand 80, 16 Rand, I've got a beautiful inverse head and shoulder formation. But, I might be getting ahead of myself. Maybe there's not even an inverse head and shoulder formation on the table. And maybe the share cannot find enough buyers to get it above 40 and just reach for lower levels. It will be a warning sign. It will ring the bell for long-term investors to say, hey, maybe to consider taking a profit or even a loss for that matter, depending on what your position size is, but use some sort of risk strategy to make a decision. Because below that 40-week moving average, 11.45, 11.55, I would be a little bit worried about Sibanye. Having said that, I just maybe want to add that the stochastic, my share is oversold. What does that mean? It means the probability of the share to find buyers or to lift to higher levels is more likely. My two moving averages in my indicator is still pointing downwards, which confirms the momentum to the top, the momentum to the bottom is still in place. I want my blue, which is the shorter moving average, to break through my red average, because that will be my golden cross formation. It will tell me that the shorter movement in the share price is becoming a little bit higher than the longer term average, and that will be optimistic about the share. At the moment, I don't have that yet. So you need to keep a close eye on Sibanye. Lonmin, another one. Tough times in this market, not an easy call, but there is a tweezer bottom in Lonmin. I know, nobody's going to believe this, but a tweezer bottom is a positive formation. The share found for 2 weeks in a row support at 10 Rand 85, and I cannot ignore that. That means that the share, despite all the negative news, despite the weakness, the share managed to find support around 1085, and that is seen as positive. My tweezer bottom would be confirmed above 1163. So if you want to nibble on the share and buy it and you don't want to preempt it, 1163 is your level to overcome. When the share starts to consolidate below this 1080, 1078 level again, the warning will be on the table. But again here, just like in the case of Kumba, we might have a bullish flag formation. A bullish flag, an uptrend, a little bit of a breather, and then when that upper band changes into a support again, we can assume that the momentum to the top continue. And that upper band, if I project it, is waiting there around 12 Rand 30. Above 12 Rand 30, I can assume that the momentum the overall momentum will continue again to the top. Take note how closely this possible tweezer bottom is at the 40-week moving average, and that is waiting at 10 Rand 35. 10 Rand 35 on Lonmin needs to remain a support on a weekly close, on a Friday close, in order for me to remain optimistic about Lonmin. Difficult trade, a tight stop loss you can use is that 10 Rand 35, but maybe when that 12.30 changes into a support, the overall momentum on Lonmin will continue. Netcare, and maybe if we have time, we can look at the platinum price and give us a little bit of another indication of what will happen on Lonmin. The momentum to the bottom is clearly in place. Do not try to catch a falling knife. On Netcare, we have to wait for some sort of positive candle, some sort of turnaround pattern to identify and to highlight that, hey, at some stage, investors found value and started to nibble and accumulate the share. I do not see that yet. The momentum to the bottom is still in place. And I mean, this share is trading around the same levels it did in April 2013. But it doesn't say that you need to just get in there and buy. I cannot see that there is some buyers that has found some value there. It's just selling pressure after selling pressure. I mean, last week it was down 11.75%. This week it's down another 8%. I mean, this is a share that traded around 43 Rand 88 in April 2015. Definitely a share to write down, keep on your radar, because I think when it starts to turn around, it might be a beautiful opportunity to get in. Let's just see what it looks like on a daily graph to see if there is I've got a possible dragonfly candle here with a little bit of a lower shadow, a longer lower shadow, but I would wait for the next candle to confirm optimism. This might be a hammer candle as well. I can't see a little bit of a shadow, so no, I would rather call it a dragonfly candle. But my stochastic, clearly, obviously, would be oversold because it's plummeted, it's retraced so much. But I can't see a break upwards on my stochastic, on my two averages. So I would not get in yet. If you want to preempt it, and you're a risky trader, yes, then by all means, go long above 90 Rand. Use a stop loss of an 1850, and targets towards the top is 20 Rand, 20 Rand 75, 20 Rand 90, 21.53. At that stage, you should be thinking of banking profit. But I would wait for a confirmation candle on our daily graph to say, okay, here is opportunity. I can see buyers are starting to nibble on the share, and it's starting to stop making lows, and it's starting to reach for higher levels. A share that I do want to have a look at is Amazon. We've previously spoken about the share, and we spoke about a possible head and shoulder formation. And I wanted to highlight again, or just discuss it to see whether the share has managed to change this $1,959 into a support again. And since we last discussed it, it haven't managed to do that. In fact, it looks rather that the selling pressure is on the cards and that the share might be reaching for that 40-week moving average, which is waiting at $17.43. I can only be optimistic about Amazon again when it starts to consolidate above that $1,959. My stochastic has already broken downwards and it's pointing downwards, and there's still a lot of room for downside before I can call this share oversold again. So at the moment, the momentum to the bottom is still in place. The question is the head and shoulder formation still on the cards? I would rather say lower highs are on the table, because this possible right shoulder is a lot higher, or is very close to the head and a lot higher than the previous left shoulder. So we would rather refer to this as lower highs, where this high point where resistance was found is lower than the previous level where resistance was found. And that is seen as negative. And we know because of the trade wars and everything that's happening with Huawei that the whole tech sector is under pressure. And we can see that in this Amazon tech giant. Critical level is the 40-week moving average. And then this massive lower high would be confirmed, or even possible a top would be confirmed when $1,371 changes into a resistance. A share that we need to keep an eye on, and 1959 at the top, we can assume more upside, but below that 40-week moving average, definitely a warning formation on the cards. Dow Jones, I think it was Kumalo who wanted us to discuss the Dow Jones. And this possible descending channel, or I can't call it a possible descending channel because it was confirmed, but this descending channel is a positive formation. It tells me that when the index changed 25,100 into a support, that the target of this was a new high around 28,000. But this week on April, towards the end of April, the Dow Jones found some resistance, and that is seen as negative. And we can see the Dow Jones is at a critical level, the 40-week moving average. If it can find enough buyers to keep it above this average, yes, we can maybe go back to 26,662 and change it into a support again to continue the upside, because there is a possible inverse head and shoulder formation on the cards that might take this index to higher levels. But it needs to find a little bit more buyers to lift this index to higher levels. So at the moment, it's almost in a decision-making stage. My stochastic is pointing downwards, which highlights that the momentum to the bottom is in place. But it needs to remain above 40, and it needs to change and keep 26,040 into a support in order for me to think that the upside will continue. And maybe this would be a better inverse head and shoulder formation. Let me just draw it in there. A left shoulder found resistance on the neckline, bounced again with the head, found resistance on the same trend line, the neckline, made a little bit of a right shoulder. This might be a false break, a whipsaw, because it went and changed that neckline into a support. Bounced, retraced again, found a little bit of support. And when this index keeps on reaching for higher levels, when that neckline, that trend line that I've drawn in here, where that changes into a support, we can assume that the index can reach for higher levels, and the target would be the length of the left or the right shoulder, depending on how conservative you want to be, to the upside, projected from the neck onwards. So then we then 26,662 is an easy target, and even higher. So that neckline is the key is the line in the sand for us, and then stop loss would be that 40-week moving average. If the index starts to consolidate below it, I would become pessimistic, and it will ring the bell for the long-term investors to be careful about the Dow Jones. See you in 2 weeks' time. Have a fantastic week. Cheers.